Good evening, everybody. This thing kinda shifted right there, maybe. Yeah, work for now. Not ideal, but that'll work for now. I'm a little bit dark, actually. This whole angle is just not great for me, but we do work with what we got, Gang, what's up, everybody? Let me share screen here. All righty. What is good, everybody? What's good? We are live. Let me get Discord pulled over to the side. I know we have Ron G and Miss Allie on tonight. Super excited. Thank you both for being on. Welcome, everybody. Welcome. Lesson 5. We are here. We are at the pinnacle, I would say, of our strategic lessons that we're going to be covering, within this program. Now, lesson 8, we are going to cover, sort of tie everything together a little bit more. And there's going to be some bonus lessons that you will all have available tonight. I'll talk about that in just a second. So there's plenty more technical stuff coming your way, but this is probably the big, culmination, so to speak, from a technical perspective, tying together or teaching not tying together, I should say, but teaching the last pillar of what we do, right? So that being said, let me just clear. I got a couple Discord DMs that I just want to make sure it's nobody freaking out. Okay, cool. We should all be good. I also want to make a point for earnings types of setups. Please make sure that you have watched the charity webinar. It's been posted in several different places. It's also pinned in the Mastermind updates channel, the announcements. We've talked about this before, but with earnings season coming up, I do a really in-depth talk there about an earnings system and strategy. So we'll cover that a little bit more in lesson 8, but we also covered it super in depth there. So make sure you've reviewed that, and that will give you your guide. So yeah, Shiner, I love you. Stop asking me to review earnings names, because I have a very specific plan of what I'm going to cover during these lessons. So that being said, tonight, the goal of what we're going to cover is multi-time frame analysis. That is going to be the large subject that we want to focus in on. That is going to be the really goal of this evening. Now, the other thing that we're going to talk about tonight, and this will vary a little bit from class to class. In most of our other classes, we talk about this in lesson 3, but lesson 3 has become such a thick one for me that what we're doing now ultimately is we have sort of shifted failures into this lesson as well. So we're going to do a deep dive on multi-time frame analysis. We're going to do a deep dive on failures. We're going to tie technical analysis together a little bit. We're going to review the QQQ, failure to go lower, after we talk about failure specifically. Then we're going to review the Amazon relative strength, which will identify just one example of relative strength that we look for in the market. So let me just go ahead and post really quickly. Thank you, Allie. I just was about to do that. We are live in Mastermind. So perfect. Thank you, Allie. Before we get started on class, I do want to make a little note and just say a little thing. I am part of, several Discord communities. I'm friends with a lot of people who own them. There are several very good ones out there. There are a shit ton of not so good ones out there. And I today got to witness just some chaos in a few other places, and it just made me so grateful and appreciative to what we have here. So I want to give a little shout out and a thank you to you all, because it wouldn't be possible without any of you here, without everyone sort of buying in with the same mindset that we take. I know I talk about this a lot, but truly we have the best environment in the world, and there's a lot of chaos elsewhere that we don't have to deal with, and I am incredibly grateful for it, right? Like, the biggest hiccup I've had in the, since I started this room was the emojis on some of my trades, which happened like once a month, and we just removed emojis. That's no longer a problem. Like, if that's our biggest issue, like, I should be really grateful, because it's just chaos elsewhere. So I'm very grateful to you all, because none of this I can say all this stuff, but none of what I say would matter if people didn't buy in and actually act that way, right? So I really am grateful for the way that everybody acts. So this isn't unrelated, but there is going to be, tonight is sort of like, I call it, at least for Mastermind classes, tonight is kind of like a Christmas, right? It's kind of like another version of a Christmas, or whatever holiday you celebrate, because at the end of tonight's lesson, you are going to be receiving 5, I believe it is, videos. You're going to be receiving the multi-time frame analysis lesson from class 4, from 3, 4, and 5, all their multi-time frame analysis lessons. I think 2 as well, but I need to double check but 3, 4, and 5, you will get all of their multi-time frame analysis lessons. You will get a bonus individual candle lesson that was my favorite lesson I've ever done, which is 50 minutes of pure gold. Then you will get a meta trade review where I recorded my screen live while I was in a trade. So you're going to get like 6 or 7 videos as soon as that ends, probably like 10 hours of content of extra stuff that I wait until after I have taught you the entire strategic portion of the course to have, so that you now have extra material to reinforce it, especially this lesson, because this lesson we cover a different example with each class that we do, right? So I know there's a few of you eager willies out there who already scrolled through the Mastermind Updates channel and found some of them, but tonight I will formally post them, as I hope, and the goal is for people not to go through and do it early. I teach this in a very specific manner. Each lesson, again, is not random. It's very specific. So when you ask like, hey, can we cover this tonight? I don't mean to be rude when I say like, no, it's just like, I know exactly what we're going to be covering tonight, right? Like I have everything planned out so much. So I'm hopeful that everybody was patient enough and did not. For those who were eager, I hope tonight provides you a little bit of a different perspective on what you learned when you watched the previous classes, lesson 5. But again, those will all be posted in the M6 channel tonight. You'll get 3 or 4 previous multi-time frame analysis lessons, 2 or 3 bonus lessons, and yeah, so it'll be like 10 hours of content, all technical strategic stuff that's going to be drilled and seared into your brain, right? So tonight I truly believe it's kind of like Christmas when it comes to some of the video material you'll be receiving. So that being said, tonight we are going to be first reviewing everything. Like I mentioned, I need to sear this stuff into your brain so that you never, ever, 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 ever forget it, right? So we as technical traders approach the market far differently than most traders out there, right? Most traders out there take a similar approach that people in basketball will take, where they come down the court and they run a set play. When the MACD crosses, I buy. When the EMAs cross, I buy. When price breaks over this, they try and make trading if X, then Y, which is good in theory, but really hard to do in reality, because it paints trading as a science, when in reality, there's a lot of art to trading. It can't just be a science. If it was a science, people would have figured it out. Algos would have been made that can just make people money nonstop. Everybody would be rich, right? It does not work that way. There is a human element to trading, comes along with psychology, right? That sort of forces around, that makes trading an art, not a science, right? So it's important that we create a system of rules that allow us to operate that way, right? First being is that our system is reactive. We allow the defense to tell us what to do, and we have a set of reactive rules that we follow when we see certain things happening. The triangle offense, what's also a great note is the triangle offense has a defensive system built in, right? Which is a huge part of what we do, is knowing on days when to be defensive, when to be offensive, what is lining up for us as A+ and what is not, right? So tonight we're going to really dive into what it goes on our checklist, right? And then in lesson 8, we're going to tie everything together and say, what is A++? What are we looking at? What is the ideal, right? I'm going to light up a little bit better. All right, this is not my recording area. This is like my actual trading area. I have a separate area that I record stuff in. So this is not, meant to be super purdy. That being said, we as technical traders need that set of reactive rules, right? And there are 5 that we focus on primarily. First is that markets are always either trending or ranging. There is no in between. We are either in a trend or we are in a range, and likely we are in a trend, then in a range, then back in a trend, aka a bull or a bear flag, right? That is very important to understand. There's no in between. Markets are always trending or ranging. 2, the break of a previous candle high or low should get continuation in either direction, right? And we say should, especially emphasized tonight when we'll talk about failure patterns, because when what should happen does not, we take that as a clue, right? That is a piece of our puzzle that we then put in to try and ultimately solve the most complicated puzzle on earth, which is trading. Right. Another important note is that candle analysis is applicable on all time frames. So everything that we're looking at on a 5-minute chart, a 2-minute chart, a 1-week chart, a daily chart does not matter. The candles are the same on any time frame. They just change the style of trade. Using the weekly chart, you would more likely be looking at swing trades or holding something throughout the course of the day. On a 5-minute chart, you are probably looking to scalp and be out of that trade within the next 2 or 3 5-minute candles, right? Last of our rules is that markets move from level to level. And again, this isn't for Instagram. This is just for me asking you all. But have you seen over the course of the last few days, since we taught the levels last Thursday, have you seen them working, right? Like, have you seen them start to actually look like really accurate? Right? Again, this is not for Instagram. This is just me checking in with you guys, right? Like, it's crazy how accurate they are, right? Like, it is crazy. So in my opinion, again, I want you all to fully buy in, bail on every other system you've learned to do levels, right? Again, we'll talk about more about when to mark pre-market highs, mark pre-market lows, which most of the time you can always use those as some sort of reference point. But for us, the actual levels, waiting for the levels as a trigger to enter trades, right? And actually using the levels as a reference point. It's crazy how much your win rate goes up once you start to utilize the levels and start to actually give yourself like reason, right? Because like we say in our 5th rule here, the markets move from level to level. This shit is not random. When X happens in the market, when something happens, when we get acceptance and confirmation closes and a trend above a certain level, the market does that for a purpose. It's going somewhere. It's not just going to, and it's really cool because before we dive more into charts, I always get stoned and think about this, but I think that it's really cool just to think about in general, which is this idea of like markets move from level to level, right? Like, why is that? In my opinion, it's because traders move the market. Like, people always think that like news moves the market or like catalyst moves the market or whatever case. In my opinion, short-term traders move the market, right? We propel moves in one direction or the other, right? And we are actually the ones continuing on making the right. So I again, there's probably short-term traders at much higher levels with bigger capital than us who are actually dictating those moves. But it's interesting thing because it's like when you say like, oh, why do Jake, when Amazon broke this level, why did it go up and tag that level specifically? In my opinion, it's because short-term traders, whether you're talking about institutions or retails or whoever, right? Short-term traders had a target in mind on that trade, right? Like it was, people were pushing it, scalpers, people who took that entry on the daily chart were waiting for that target to hit. Then people on the 15-minute chart who trade that were taking their trade, waiting for target to hit. Then people on 5 and 2 and 1-minute charts were using their system of entries to get entries in and out, pushing it up, right? So it's just cool to think about sometimes. And in my opinion, I really believe that short-term traders are responsible for a lot more than most people give credit, right? So it's always interesting to think why markets move from level to level, you know, but I always think about that shit, right? I'm like, why does this work, right? Like, I have no fucking clue. I don't know, but it does. That's the best part about it. It's crazy. It's crazy. And the coolest thing is that the system that we use has been around since the dawn of time, right? Like since candles were invented, trend analysis and candle analysis have been around, right? Like, and the concepts of support and resistance have been around, right? So like it's like they're never going to go out of fashion, right? Like I think that some other setups eventually went out of fashion just because like too many people got eyes on them. Like sometimes 9 EMA, right? Like forever people always just like just trade the 9 EMA, trade the 9 EMA, and it's like, well, the 9 EMA works in trending situations, but in choppy situations, 9 EMA buyers or sellers get screwed. And so I don't know. It's always cool to think about, right? Sorry, sometimes I get sidetracked, but markets move from level to level. They have a purpose. Getting us back on track. Sorry, sometimes I rant. I think it's cool, but nonetheless. So with that being said, we have covered a lot of things over the last 2 lessons in a big portion of our strategy, right? So again, the 3 pillars of our strategy. First is candle analysis. We talked about this in lesson 3. This will come from in the form of finding entries most of the time for us, right? It will also play a role in our longer time frame theses, like looking for a daily or a weekly buy or sell setup to capture a large move, right? But for most of our, for our purposes on these three pillars, candle analysis is how we find our entries, which is with those buy and sell setups, right? Or with a failure pattern, which we'll talk about tonight. Second pillar that we have is trend analysis, and we've covered the higher lows, lower highs, lower highs, lower lows, lower. We've covered that in depth. And from what I have seen in Mastermind chat and in questions channel, I think everybody, unless you're just afraid to speak up, which I get, I totally get it. So don't, like, I get it. You don't want to feel like you're behind, you don't know what you're doing. But I've even said stuff like DM me, right? So like, I'm under the impression that, again, while people are still trying to refine their skills and understanding of this trend analysis, I'm of the understanding that everybody's like grasping the concepts and is really starting to like see stuff, because I'm not getting DMs about, Jake, I feel so lost, I'm confused, I'm behind. And I know that our questions channel has been getting absolutely just hammered, especially J Babs and our team have been just totally on top of it, right? But again, if that stuff, while confusing, is still, or if that stuff, while straightforward, is still confusing to you, I want you to take it upon yourself to start posting more charts, right? So that we can see what you are seeing, right? Because that's the best way to learn. Best way to learn is to post a chart with all the higher lows, lower lows, whatever, all that marked out, and be like, hey, was I on the right track here? If you show us that you went through that effort, we're going to go through an effort to respond and tell you what you did right and wrong. So if you feel like you are behind on that, take the steps to go forward, right? I'm hopeful that nobody feels behind on anything. Again, I don't expect you to feel like, oh my gosh, I got this down already, but based on the way that the conversations are going, I'm very happy with how the progress everyone's making so far. And honestly, I think this class more than others, we've had no stragglers. Straggler being somebody who just felt like they were left behind because it was moving too fast. I don't think we've had anybody like that in this class. And from my knowledge, at least, and that makes me really happy. This also includes on trend analysis, multi-time frame analysis, which we will cover tonight. That is the big topic of tonight, right? Understanding that trends are different on different time frames. Then third, we have levels, which are derived from the hourly chart. More details came from the previous lesson, right? Then we have our support and resistance rules. We're going to cover these really quickly. Again, I'm just reviewing this stuff because I like to sear it into your brain. First, we have the knock-knock, which is that the more times a level is tested, the more likely it breaks and breaks with power. Our second rule for support and resistance we have is the Uno reverse, which is that once a resistance is broken, that previous resistance should act as support when retested, or previous support should act as resistance upon being retested. Lastly, when you're boxing or making levels, hit the body, my friends. We focus on the bodies of candles, not the wicks. Wicks are a good visual representation of level tests, but bodies are where we find price acceptance. And I got to edit this right here. Everybody, you know the drill. You know the drill. Say it with me. The open of the candle that changes trend. That's where we mark our levels. If you've had any confusion as to which candle to mark, remember what we say. The open of the candle that changes trend. That's the level that we mark, right? But like I said, whether you're boxing or marking levels, hit the body. Focus on it, right? Now, I want to do a brief review on buy and sell setups. Again, I'm hopeful that everybody has a good grasp on these, but it's really important to understand these so we can start to talk a little bit more about failure patterns, right? So first, let's talk about sell setups. As a reminder, sell setups are most applicable during with trend potential plays. Something is choppy and in a range. I'm not looking for sell setups because it's stuck in a range. An example of that will be from today's trade review on QQQ. Right. But during a downtrend, what we wait for is a rally to establish some sort of resistance and then a bar to take out the previous bar's low. Within this sell setups, we have two candles that we want to pay particular attention to, our signal bar and our entry bar. The signal bar is the bar that signals to us that a trade is forming. This bar provides us with both our entry and our stop loss. Our entry bar is the bar that we use to actually enter the trade, right? So for sell setups, our entry is below signal bar low, and our stop is above signal bar high. So it's tough to see here, but we have a doji, right? And with this doji, following our rules, right? We wait for a rally. Again, we're assuming, just because I have to start the chart from somewhere, we're assuming this chart starts like this, right? Where it sort of comes down, has it's failing essentially, right? It's not pulling back. Let me actually mark this up a little bit more just to make it a little bit clearer. So we took out the higher low right there. We're in a confirmed downtrend. All right. So we get this rally up, break beneath there. We take the entry. Do we wait for the close of our entry bar, my friends? This entry bar right here, we wait for the close of that candle? Nope, exactly. Why? Because we waited for the close of our signal bar. We were patient for that. That's the candle that's providing us with our entry and our stop. Are there times where you'll get in on the break below or above a signal bars and it'll immediately reverse on you and you'll get stopped? Yeah, that's life. That's part of life. That'll happen. Good news is your stop loss was one candle away. And if you were patient on your entry, your one candle away stop loss is likely like 10 or 15% on the options contract, right? Depending on what time frame you're using, all that kind of stuff, right? So signal bar and entry bar. This is a valid sell setup that ends up working. And the main reason we know it works is because we have support right here that ends up getting taken out, new lows, right? On a sell setup here, our first target upon entry on this would be the previous swing low, right? That's the first target to look for a small trim or for a trim, right? So in order for this sell setup to succeed, we want to see a break back beneath that low to confirm to us that we are continuing on within our trend. So I just got a text update and I always like to make sure it's not an emergency, right? So this is a sell setup that triggers successfully and it works, right? So I happen to have the chat open right now. So I want to address something. Somebody said, I don't understand what makes that a signal bar. Then a variety of people jumped in with answers that I'm not entirely comfortable with it yet. The reality is, what makes this a signal bar, right? By definition, what makes this a signal bar is the next bar breaking beneath its lows. That's it, right? Because in theory, if this was just a doji and the next candle broke above its high, we are not shorting that, right? Because that would more be a 1, 2, 3 pattern to the upside, right? Now, what I will say is that, Jake, is there any clues that this is going to be a signal bar before we get the break beneath that candle's low? Yes. One of those clues is that a doji is a reversal candle, right? It doesn't always act as a reversal candle, but it can be. It's also, this particular one, while it's tough to see, is an inside bar, right? So similar to how an inside bar break could work to the upside, it could also work to the downside, right? So those two clues, it being a doji and it being an inside bar, right? Again, all while none of that matters unless this stuff is true, aka it's in a downtrend, right? If this is in an uptrend, then I'm not looking to short that first break right there. It has to be in a downtrend, right? So what makes this a signal bar? What by definition makes it a signal bar is the break beneath that next bar, that bar's low, right? Especially when we tie back into our earlier rules that a break of a previous candle high or low should get continuation in that direction, right? So what makes it a signal bar versus what clues are that it could be a signal bar are two different things. And that is why not all buy and sell setups are equal. For example, this buy setup that we see right here is a very pretty looking buy setup. We have a hammer forming and then another bar that forms a little wick down and confirms strong breaks over a hammer that gives us that sort of clue, right? This is what I really love this as a buy setup, right? And you could actually even argue on this next one that I really like this as a buy setup too, right? It's a hammer. It's clear from a candle perspective that we are seeing some sort of structure indicating a reversal there, right? But the other thing that I'll note, and that's why it's important to go back to this example, right, is that not all buy and sell setups are going to be picture perfect. There are going to be times where a buy setup is a red bar, a fully harsh red bar, and the next candle fully engulfs it as a bullish one, right? That one is not like traditionally, you wouldn't be thinking that that red candle is going to be a signal bar, right? But a buy setup still triggered, right? So what I will say is that not all buy setups will look the same and all that, but not all of them are created equal as well. If you chose to skip this trade because you thought, hey, this might 1, 2, 3 to the upside, and I don't love this as a signal bar, I don't love this as a sell setup, I'm just going to be patient and wait for a new entry. There's nothing wrong with that, right? Me personally, I've had enough screen time to recognize that this doji, whilst in a downtrend, right? Again, requirement would be that we are in a downtrend before any of this happens. That doji, and with my screen time, I'd be able to recognize that as a potential reversal clue, right? Again, we have those beginners things in the MM education section that will help with basic types of candle stuff, right? Like hammers, inverted hammers, all that kind of stuff. So again, I think it's a very important distinction to make, right? It's a very important distinction to make because I saw that question. I saw people hopped on it really quickly. What makes it a signal bar is the fact that we triggered, right? Because if we end up just going and having another inside bar, that one wouldn't be the signal bar, right? The subsequent inside bar would be the signal bar. You see what I'm saying? Right? Like if you were looking, say this was an uptrend and you were looking for a buy setup, you could plan for this green one to be your signal bar, but until it triggers, it's not, right? So by definition, what makes this a signal bar is the fact that it triggered into an entry bar and fits our definition. Very key, and fits our definition there. However, there are traits of that candle that could have clued you in to the fact that it's going to be a signal bar. And the best setups will have those kinds of clues. An inverted hammer, a potential lower high, a potential higher low, right? All of ours are going to be looking for potential higher lows or lower highs. But this candle probably wasn't the one that was clear as day. That being said, after this explanation, are we all a little bit more clear at are we a little bit more clear on signal bars and entry bars? Okay, cool. Mike, sweet. You're right. Perfect. Awesome. That was a great question. And I think that was a really good thing that we covered that. That was a very good question. Good thing that we covered. I saw one other question in there that Ali answered, but I want to make a note of. I personally don't use volume at all. Now, if I have it up on my chart, so if I see a random volume spike, sometimes you'll see me note like, funky volume spike, right? Like, and sometimes when I'm watching the options contract chart that I'm trading, if I see a big volume spike, I'll be like, someone's buying these contracts, right? That's interesting. But no, I don't look at volume at all. It makes no impact on my decision making whatsoever, personally, because it's just too much noise. It's like people will be like, I've heard people tell me that like heavy buying on the way up is influence of like strong buying pressure. And then when something goes really strong up, you see a ton of buying pressure and starts selling off hard. They're like, well, wait, no, that was exhaustion. It's like, well, what the fuck was it? Was it strong buying pressure or exhaustion? Did one lead to the other? I don't, it's too much noise for me. It's too much noise. And everything we're learning right here, nothing against you if you use volume. I don't have any problems with it because I know a ton of traders who are successful with it, right? Volume is not really one of those things that I can like debate, like much like trend lines, even though I don't like them, people have success with them, trend lines and volume. So like, unlike the MACD, which I will argue against, trend lines and volume, I can't argue against. Trend lines I can, but I don't advocate against them. But everything we're teaching you, you don't need volume for that to be true. If I see a sell setup, why do I care if it's high volume or low volume? You know what I mean? Like, I just want to take the sell setup, maybe the high volume. Oh, there wasn't high volume. And again, I'm not attacking anyone who asked this question. I'm just giving my rationale. It's like, oh, why wasn't there high volume on this sell setup? It's like, well, maybe they were just waiting until we broke support and then high volume came in, right? It's like, who cares, right? I think we probably got the better entry anyways, right? So again, that is a sell setup, right? important to understand, and I'm glad that we now all have a better understanding of what exactly a signal bar is and what exactly an entry bar is, what requirements and what clues we have of those. Now, next we have buy setups. I'm not going to cover these ones as in depth because I want to keep us moving along. I know I'm ranting a lot tonight, but buy setups are most applicable during with trend plays, exact opposite of what we just talked about, right? During an uptrend, you wait for a pullback to establish support. Establish support level, a bar to take out the previous bar's high. We have our signal bar, which in this example would be this red bar. And then we have our entry bar, which in this example would be this green bar here, right? This is another example of a successful buy setup that ends up taking out this area right here. So people often ask me about trimming, and we'll talk about trimming more in lesson 8. But for me, I try to hold the bulk of my position until target or until dynamic R has shifted against me. But usually the first place I will at least take a small portion of my position off is the break of a swing high or low based on our buy or sell setup. So if you took this buy setup, I would be looking to trim around this swing high, but usually trim a pretty small portion of my position because I really want to aim for like the next level or wait till my dynamic R has shifted, right? But that would be the first place that I would look to trim part of my position. On this example, the first place that I would look to trim part of my position is on a break of these swing lows, right? From there, it becomes a little bit different. Again, we'll talk about trimming a little bit more, but I also want everybody to understand trimming is, again, it's an art, not a science. And it's something that you will learn and learn every single day on there. Last thing I'll note on trimming is a few students have asked me this, and I think I made this clear to everybody in this mastermind class and make it super clear to all former mastermind classes. When I am giving signals to trades, that is a little bit different than how I would personally manage them if I wasn't signaling for that. I run a business. Part of that business is signals, right? So sometimes I am more inclined to trim positions a little bit earlier or signal more frequent trims because I know that people, and again, I never advertise my win rate or anything like that. So you guys, it has nothing to do with like the business side of it. I know that people, our members, maybe some of you all, but hopefully not after this mastermind, struggle to see a trade go up and then pull back. Right. And so I trim smaller than that. Oftentimes, if I was just trading locked in a room by myself, or like many of you are focused on your own trades, right, I would try and trim far less frequently than I do for signals, right? I think for signals, it's really more in I need to protect people. I need to protect people from going on tilt. I need to protect people from not doing stupid shit because in my course of signal giving, I've seen too many blowups, right? So again, as long as R to R makes sense on the signals, I need to make sure that people trim. So if there's some confusion, like Jake, you trimmed Amazon 3 or 4 times today. If your real trade thesis was a larger breakout, why didn't you hold more? Blah blah blah. And it's like, well, I did hold more, but I want to make sure that people are defensive, right? It's really as a protective manner for me. So don't look into my system of trimming on my signals as like something to like really study intensely is one note that I would say. I do think it's a good thing to study because you can learn a lot from it. However, don't be like trying to mimic it, I guess is what I should say. All right. Now that we've covered buy and sell setups, it's important to cover failures to go higher and failures to go lowers. Now, this conceptually can be hard for people to grasp. So I'm going to try to explain it in a way like I haven't done before. I have an analogy that I thought about today that will make it a little bit clearer. First, I need to address what we have written on the screen right now. First things first, a failure to go higher is a concept and a broad idea that can be visualized through a variety of different things, right? Like we mentioned, right? The break of a previous candle high or low should continue in either direction based on the rules that we follow. So the break of a previous candle high should go higher, right? So something could be in a super strong uptrend, right? And then put in a little red doji at the top, right? In the moment, we could consider that a potential failure to go higher if we started to reverse from there. Does it mean that you should short that doji? No, right? Especially if something's in a super strong uptrend, because the next candle could just rocket through it, right? So the idea of failure to go higher and failures in general are a concept. They're a broad idea, right? I want you to think of them like a couch. Point is coming to this. I want you to think of them like a couch. And for our imaginary pictures, let's just picture like a little bit of a bigger couch, right? But a couch. A couch. Let's picture failures in general as a couch, right? Now, within this particular example, all right, let me continue real quick. The definition of a failure to go higher is very simple. It's exactly what it sounds like. Something that has reason and attempts to go higher, yet fails, right? Now, the reason we pay attention to these is that failures often provide strong moves in the opposite direction. So in this particular example, and I'm curious what people see. God, I just scrolled forward, which gave it away. I hope nobody saw it. But 3 to potentially 4 words, depending on how you define one word. But what would you say that we see in this particular picture? What's happening here? A move up, a move up. If we start from right here, what happens going forward from here? 3 to 4 word answer. Trend reversal, lower high, double top, failure to go higher. No, none of those are bad answers, but I want to revert us back to a second. Reverse us back to a second, right? We just talked about how during an uptrend, you wait for a pullback to establish support and a bar to take out a previous bar's high. That happens here. By definition, we see a move up, and based on the information we have in this picture, we can only assume that we are an uptrend. We saw something pull back, establish support, and trigger a buy setup, right? Long above that high, short or stop beneath that low, right? It triggers a buy setup, right? Same exact thing, right? Same exact thing, right? It triggers a buy setup. Wrong one. So in this example, what do we end up seeing here? A failed buy setup, right? Now, we talked about it on this sell setup. What made this a successful? You see how I'm now tying all this shit together like a loop-de-doop, whoop, whoop. You see how earlier on we talked about how what made this a successful quote unquote sell setup is when we got that break beneath the previous swing low and continued the trend, or what made this a successful buy setup is when we took out that area up there, right? This particular chart was never able to get back over these highs, right? Here we see an example of a failed buy setup. We see a failed buy setup come into play, right? And oftentimes this can present a trade in the other direction, right? Or at least present a clue that a trade is coming, or a trend shift is coming, or a trend flip is coming, right? So we see an uptrend move up, pull back, buy setup. Textbook buy setup, in my opinion. If this is the info that you have on the chart available to you, that's a textbook buy setup, right? There's no disagreeing with that there. Assuming all you have to just assume, is that it went like this first. Boom, start a little bit lower, boom, right? Textbook buy setup there, right? But we see in this example, a failed buy setup, right? That ultimately ends up coming back beneath right there, right? Let me turn off annotate. So really what we are seeing here, right, is something has a move up, right? Has move up, has a pullback, the buy triggers, but the buy starts to show us signs of failing, right? It starts to show us signs of failing. And really that first key sign of failing comes on a break beneath that bar's low, right? Because in theory, we just broke above a previous candle's high. We know that we should continue higher based off that. Should. Why are we breaking beneath that bar's low? Now, another important question you have to ask yourself is, or one other important thing you have to identify is, all of a sudden, this action right here with the break beneath that bar's low, all of a sudden puts us into a potential lower high, right? That potential lower high ultimately ends up becoming a lower high once we break back beneath this area and confirm into a downtrend, right? So this would be an example of a failed buy setup, which could be a potential short entry here, right? Now, a failed buy setup is an example of a failure pattern, right? A failed buy setup to me is what I would call a love seat, right? It's like a love seat, right? Now, is a love seat a couch? Yes, in my opinion. I don't know if this is actually technically accurate, but in my opinion, yes, a love seat is a couch. Are all love seats couches? Yeah, all love seats are couches. Are all couches love seats? No, they're not, because you could have a sectional couch, you could have fucking a ton of different shit. Not all love seats are couches, meaning this failed buy setup is not the only example of a failure to go higher that we will see. Failures to go higher can present themselves in a variety of different ways. You see this chart right here moving up, right? Well, we actually at this point in time put in this kind of reversal doji, and then the next bar breaks beneath its low. This bar broke above the previous candle's high. Based on our rules, tie it back, based on our rules, we should continue higher, right? Where's the one that I'm at? Right? Based on our rules, we should, where was I? Based on our rules here, we should continue higher. So you could look at this as an example of a failure to go higher, right? Now, am I shorting this failure to go higher? No, because it's counter trend. This is in an uptrend. We have to assume that this is going to pull back and continue its uptrend, right? This isn't a potential lower high. It's a potential higher high, right? I'm not shorting on that failure to go higher. You see how that, do we understand how conceptually, just from a broad point, does everybody understand conceptually how this circle right here is a failure to go higher in a sense, right? We fail to go higher based off our rules of continuing, right? But that is not a place where I would be interested in taking a short entry, right? Now, the reason I would be interested in taking a short entry here is we get the failed buy setup, which presents us with a potential lower high, right? So we are more likely to be trading with trend after that failed buy setup, right? That failed buy setup is an example of a failure to go higher, but that's not the only way that failures will present themselves, right? All love seats are not couches. No, all love seats are couches, but not all couches are love seats. All failed buy setups are failures to go higher, but not all failures to go higher include a failed buy setup. Hope that makes sense for everybody. Sear it into your brain after a rewatch. It should click, right? Right? Sorry, pardon me. Give me 1 second. Now, the other thing I want to note is that it depends on every other factor. Like, do we have a level here, right? If we have a level here, like right here, then I'm much more inclined to be willing to take this short, this potential lower high, because it could be a rejection and failure of that level, right? If we don't have a level right there, let me clear these drawings a little bit. Right, let's assume we don't have a level up top, but let's assume we have a strong level, or not strong, but just one that's been important to us right here, right? Am I more inclined with no levels till like way up here on the upside, right? Am I more inclined to take this short right here? No, I'd probably be less inclined because we're above the level and we could just form a higher low, right? It's important to understand that this was a potential lower high to start. So you're still a little bit early because you're technically not trading with trend on that particular entry, right? So again, it varies. Jake, when would you want to take a failed buy setup as opposed to the other option for the short would be waiting for a confirmed downtrend, right? We confirm the downtrend here, then we rally, set a true sell setup, and then take that. That would be the more confirmed quote unquote trade, but you have better risk reward here, right? What are the surrounding factors that would come into play when I'm choosing to take that type of trade or not? It would be, is there a level that I can use as a reference point? If we have a level right here that we rejected, pulled back to, then put in a lower high on, yeah, I'm more inclined to short that. If we have a level right here, sorry, that was terrible. If we have a level right here, I'm more inclined not to take this one because of the opportunity for a potential higher low or something like that, right? You see what I'm saying? Right? So there are a variety of different factors, and that will come with screen time and with more explanations from me, more trade reviews, yada, yada. But this is an example of a failed buy setup that we see right here, right? Which overall is an example of a failure to go higher. Important note here, candle analysis is applicable on all time frames. Sear that into your brain. I'm going to tie it back at some point in the future. All right. So moving on here, continuing on, we also have something known as a failure to go lower, right? A failure to go lower is when something has reason and attempts to go lower, yet fails, right? A failure setup often provides strong moves in the opposite direction. Here we see an example of a failed sell setup. We see a downtrend, something moving down, sets a low, pivots, heads up, and from here, we look for a potential lower high to short, right? Right here, we see that a sell setup does trigger. We have an inverted hammer at the highs, right? That closes, fails to go higher. Technically speaking, you could argue, technically speaking, not even that, but technically speaking, you could argue that right there, text box. Right, is a failure to go higher, right? Because right there, we broke above previous bar's high. We should continue going higher. Again, this would be an example of a concept, right? Rather than necessarily something super actionable just based on that. But that being said, that becomes something we're paying attention. Ooh, we failed to go higher. Ooh, we put in a reversal bar. Ooh, okay. Well, during a downtrend, we wait for a rally, establish a resistance, and a bar to break previous bar's low. So based off our rules, a sell setup was presented right there, right? And that would have, and that sell did trigger, right? You can see that sell triggered with a break beneath that bar's low and a stop above that bar's high, right? That would be, that's a real sell setup that triggered. It actually triggered and it's valid. But then you can see it fails when the next bar reverses back over that bar's high, right? Thus triggering the stop and thus changing the trend on this time frame, right? So again, much like here, where we started to see clues of the buy signs of failing and a potential lower high going into a confirmed lower high, you can see the same thing here. There's signs of that sell setup failing, right? What's the first sign? When we immediately get a wick beneath that fails to go lower, again, conceptually fails to go lower, right? And then ultimately reverses and gets the back up, right? And it goes, see, we form a potential higher low into a higher low. Same exact thing as right here, just reverse. Failure to go higher, failure to go lower, right? Again, this is an example. Here we see a failed sell setup. This is an example of a failure to go lower on a router. Now, you might be thinking, Jake, I see a whole lot of buy and sell setups and failures every single day. I mean, there's so much. Yeah, this is how charts move, my friends. Congratulations. You now, once you see this stuff enough times over and over and over again, this is how charts move. They'll be in an uptrend, and then they'll pull back, and they'll have a failed buy setup, which will flip it into a downtrend, right? Buy or sell setups will fail or work. And this is literally how charts move. So earlier tonight, when I talked about like, oh, like this strategy will never go out at its touch or anything like that, it can't, because this is how charts move. Like this is the sauce of it, of everything. Is that like, now do you see what I was saying earlier when I was saying like this is how charts actually move, right? Now, the reason I even started to say this in the first place is that you will see a ton of these on a daily basis because this is how charts move, right? So you can't just be taking every buy or sell or every failure that you see. You need to really hunker and nail it down with 3 or 4 or 5 or really 3 other things, right? That increase that checklist of this. These are how we find our entries. This is how the markets move overall, right? Do we see this is how markets move, right? It makes sense to everybody. And again, not for Instagram, just for me understanding. Do we see how higher lows, lower highs, then a buy setup failing can flip this? Do we see how that is actually how charts move? Does that make sense, right? Like it's a buy setup that will take a trend up and continue up and work. Then once the next buy setup fails, that acts as a lower high, right? Like this is how charts move. This is how they move. And it's a really, really cool feeling for me. See it, right? So here we have an example of a failure to go lower on this failed sell setup, right? We just talked about this. We see a failed sell setup, which is an example of a failure to go lower pattern, right? So we just talked about that, right? Now, let's take a step back and go a little bit broader. Well, before I do that, I'll say one note. Right here, what technically happens? What technically happens right here on this chart? You could all call it a 1, 2, 3. That's not wrong, but that's not the answer that I'm looking for. Break above previous, high, gap up. None of those are wrong. None of those are wrong. None of those are wrong. 4 bar, none of those are wrong. But let's think about this. Kebab. Gold star for kebab, right? Wait, I just got caught in like the chat here that has, there's threads in here. I need to get out of this thread things. But Bob, you got it, right? A trend change, right? In theory, right? This was a downtrend, right? And then you see a break over, or excuse me, a sell setup, a potential lower high. Here we get that high. So in theory, on this time frame, trend has changed. You see what I'm saying? Right? Do we all see that? Does that make sense? Give me a few yeses. Let's get back. Sweet. Perfect. That's all I needed. Perfect. Trend has changed. Right? Now, let's take a step back for a quick second and ask ourselves, okay, how could we have gotten a clue that this trend was going to change, right? Let's scroll back a little bit on this chart and see what we see, right? Again, this candle right here, the big one, that picture starts from right here. That's where this picture starts. Well, I guess it technically starts like right here. You see it move down. Right here, you can see we are in a clear downtrend. We have lower highs. I'm not going to draw these out on all of them because my drawing sucks with these. We have lower lows, lower highs, lower lows, lower highs. Still out. Boom. Here we get a new lower low. But look, we just broke beneath, and it almost did the same thing right here, right? It actually kind of did, where we broke beneath a previous low here. But what happens? What happens to price once we break below? Actually, let me pause and rephrase that question. In theory, my friends, based on what we know, right? When a support level or even just a candle or a low or pivot, anything, a swing low, when it breaks, in theory, what should happen next? What should should have happened here? Continuation. In theory, we should have continued lower. And I saw that there's a question from a meme that might have gotten lost in these continuations. So make sure, Ron, Ali, if you guys could help out with that one, I would love you forever, as always. But exactly, continuation, right? We saw continuation, right? That's what we would expect, right? We would expect to get continuation to the downside. From here, we start to see that the larger picture inside this failed sell setup, or excuse me, I guess you could say outside of this failed sell setup, but either inside or outside, whatever, right? You can see a larger picture failure to go lower pattern, right? Which could give us the clue that we are setting up for a potential trend change and reversal, right? Once this setup fails, once this sell setup fails, which doesn't happen on any of these other ones, up here, we don't see a sell setup fail. This move up to a lower high this whole time, we don't see a sell setup fail. As soon as it triggers, even with these gaps, just ignore these gaps for now, pretend they were connected. Even with here, right? Even with this one, we don't see a sell setup fail. They trigger and they work, right? They trigger and they work. Then we get a rally up. Then we get another sell setup that continues and triggers and works, right? It works, it works, it works, it works. As soon as we get that sell setup that fails, failures can often provide strong moves in the other direction. Here we see a sell setup that fails, and ultimately we end up getting a face-ripping rally and a larger trend flip, larger picture trend flip from that failure pattern, right? So again, failures as a whole are like couches, right? Failed sell setups are like sectionals. All sectionals are couches, but not all couches have to be a sectional. You could have a love seat, for example, right? But a failed sell setup would be an example of a failure to go lower, right? Now, the last thing I want to note, because we have spent an hour on failures, which is longer than usual, and so we're going to have a thick lesson tonight for sure. But right, the one last thing that I want to note on this is, again, our little note here: candle analysis is applicable on all time frames. The reason I mention this is because this example here came from a 2-minute time frame, 2-minute chart. Believe it or not, it was actually NVIDIA, which is weird with these gaps. I wouldn't expect NVIDIA to gap this much, but this was NVIDIA, right? This is a 2-minute chart. Here, this one was Zoom, and it's a weekly chart. Does not matter the time frame you are looking at. The principles of everything we just talked about are the exact same. All right. Okay, everybody. Let's pause there. Everybody take a break. The breaks are probably going to be a couple minutes longer now that I got to hike down these friggin' stairs to go to the bathroom. Again, first world problems, but sure you got it. My legs are going to be jacked by the amount of times I run up and down these chairs just to smoke joints. But everybody take a breather, and we will be back in just like 2 or 3, 4 minutes. Okay. All right, everybody. See you soon. All righty. Welcome back, everybody. So I saw the chat pop up a few times on there. And somebody mentioned, I saw somebody, I didn't see who, but mentioned that the class times are making it tough to keep up with the schedule. I do apologize about that. Again, this is a tough situation with just trying to accommodate as many different schedules as we can, right? And this time happens to be the best to accommodate 9 to 5ers on both the East and the West Coast. So do apologize about that. After this lesson, after we finish this one, going forward, what will be nice is that some of the most of the trade review sessions that we'll be doing will be a little bit more in depth now that we'll have covered, all this stuff, which will be more at scattered times, right? So again, you have all the material for life. None of the material will ever leave you. Have it for life. But I definitely, don't get me wrong, I sympathize and I get it with the whole, sometimes it can be tough to attend live. Sometimes we go longer than scheduled. Most times we go longer than scheduled, right? But we try and do our best to make it work for as many people as possible. So I really do appreciate everybody who goes out of their way to make the scheduling work, because I know you guys and gals have to do things in your lives to make it work. So I really do appreciate that, right? So that being said, let's continue on here. Let's keep knocking it out. Let's keep knocking it out and rocking right along. All right. So the main concept of this lesson is actually to cover multi-time frame analysis. The way that this one particularly has gone, we spent the whole first hour talking about failures, right? So this is part of the reason why I make sure that every class gets every former class's lesson 5. All the other lessons are pretty similar, right? Like the levels, you're not going to learn a whole lot from the previous class's levels lesson that you didn't learn in your lesson. And they're not going to learn much more from yours than they got in theirs, right? There's not much differentiation there. This lesson always goes a little bit differently. We always have different examples, right? Like lesson 3, I always use the mRNA example. You all don't need to see that exact example again, right? Because you could just rewatch your lesson. It would be the same thing, right? This lesson, we cover a different example, and we also do a little bit different mixture of the failures and the multi-time frame stuff. So if after the multi-time frame stuff, you're kind of like, whoa, I need more information on that, don't worry, because that's exactly why I give you the other classes one, because I truly believe that this is multi-time frame analysis is like the key to making this all work. And in order to understand it, you need to have here's like several perspectives of it, right? So the first things first, I would like to ask anybody, and this one, again, not for Instagram, this is just for me. I would like to know how many of you, when you were taught basic anything trading related, did they teach you top-down analysis? You start at the longer time frames, then you go down to the smaller time frames, right? Top down, pyramid scheme, whatever it is, right? Right? I have some problems with that. I don't think that top-down analysis, the principle of what they are teaching, is wrong. You should always start with the larger time frames in order to grasp, the larger picture of what's really going on, right? That part of top-down analysis isn't wrong. But usually then what they will have you do is start at the longer time frames, they'll say that, then drill down into the smaller time frames and really solely focus on the small time frames. And what really is left out of top-down analysis is how the time frames impact each other, right? I'm getting a little ahead of myself, but understanding how these time frames connect with each other is just as important as understanding what each one is doing, right? It's key to understand how they're impacting each other. So this is why in this particular next section, I'm going to teach you why I think top-down analysis is taught very much incorrectly. Right? So first, let's talk about what multi-time frame analysis is and use a good analogy for it. Throughout the course of this mastermind, we have had several different analogies used for this particular concept. However, Ron G gave me a great example that we ultimately have decided to end up using, which would be a road trip, right? Let's imagine that you live in New York. I live in California, as you all know. And as you also all know, I like to smoke joints, right? I would love it if you would make this trek out to me to bring me some joints so that we can smoke a joint together. You live in New York, I live in California. How are you going to get there? Let's imagine you're going to make a road trip out of it. Fuck it. Why? You got to pick up the joints in Colorado along the way, right? You got to do stuff along the way in order to get here. Let's plan this journey, right? We always want to consider the larger picture above all else, the weekly chart, right? This is our first priority, right? Especially when we're looking at potential swing trades. In our analogy, let's consider the weekly chart, your broad overall trip, right? You coming from New York to California, that's our weekly chart. It includes everything. Everything, all the stops along the way, all the pee breaks you got to take, everything in order to bring me my joints along the way, right? Our trip broad, New York to California, that's our weekly chart. Then we start to drill down into our daily chart. That might be you going from New York down to Colorado. That's a big leg of the drive. It's a long leg of the drive. It's an important leg of the drive because you're picking up those joints for me in Colorado, right? Our daily chart is bread and butter for individual candle analysis and for looking at potential trend analysis. We love the daily chart. It's really important that you stop in Colorado and get me those joints, right? From New York to California, that's your weekly. That's the whole trip, right? From New York to Colorado, that's your daily. It's a big leg of the trip, right? And it's important, right? But it doesn't encompass the whole trip because we're not seeing that leg from Colorado to California. Then you drill down into the hourly chart, which in my opinion is the key to it all. That is where levels, we get the levels come into play, trend analysis, buy, sell, stuff. The hourly is incredibly powerful. It's one of our best friends, right? We love the hourly, right? This is going to be your leg from Colorado to, I don't know, I have terrible geography, but say Arizona, right? This is going to be a leg that's crucial because you got to drive through the Colorado Rocky Mountains. And, you know, if you don't survive, my joints don't survive, which means you got to get through there, right? It's that leg of the trip, but it doesn't include the big trip from New York to Colorado. It doesn't include that end, right? It's a section of it. It's just a piece, right? Then you get to Arizona, you start heading towards me, but you got to take a rather short trip, right, on the 15-minute chart, right, to Nevada over there because you're a gambling addict. You decide to gamble all my joints. You snake, right? But that represents, in our example, the 15-minute chart, right? For me, the 15-minute chart is what I consider to be the 5-minute plus. I really love to use the 15-minute for intraday buy and sell setups, especially after the first 2 hours of market open. Later on in the day, the 15-minute can take a whole lot of stress off of your plate when looking for buy or sell setups. Then you get down into the final legs of the trip from Nevada to the gas station next to my house. That's your 5-minute chart. For me, I mainly use this as my main management time frame for managing my positions. And then you have that last final leg from the gas station to my place. You finally brought me my joints. We're finally going to smoke a joint together. We're finally going to get to do it. And all you had to do was go through this treacherous road trip. But that last leg from the gas station to my place right after you took the most epic pee of all time, being on the road for 20 hours, right? And we get to smoke that joint together. So this is the analogy that I like to use, right? Because it's important to understand that while there's the big trip, California to New York, there's sections and segments along the way that are representative of the smaller time frames, right? Now, that could kind of be considered top-down analysis, in my opinion, just better explained than ever before, right? But here's what top-down analysis fails to mention to you all, right? Is that the smaller time frames will impact your trip, right? The weekly chart, right, is you coming all the way from New York to California. Well, along the way, that daily chart, where you go from New York to Colorado to get me my joints, you're going to have some hiccups along the way, right? You're going to need to make a stop here, make a stop there. Daily chart's going to need to get a pullback, all these different things. And that impacts the length of the overall trip. That impacts our weekly chart, right? This is where things start to get a little more sophisticated than where most people teach us. The larger time frames always reign supreme. However, all time frames are impactive of each other, right? So let's say that we have a weekly uptrend. A stock is in a weekly uptrend. It's moving up. It's getting consistent moves up. And then we start to look for a pullback on the weekly chart, which is exactly the case from this chart. This was a buy setup that came from a weekly chart buy setup, right? So within this weekly chart buy setup, there was 1, 2, 3, 4 weeks of pullback. If there are 4 weeks of candles, 4 weekly candles, how many daily candles occurred inside those 4? Assuming it was a regular trading week with no holidays. 20. Exactly. 20. So with having the next one, having our, right, we know on the weekly chart, we were in an uptrend and we simply just got a pullback, right? But on the daily chart, the daily likely required the weekly likely required the daily to shift into a downtrend in order to get that pullback, right? Why? Because there are 20 days of price action in there. This would have had to, in order for NVIDIA to have maintained its uptrend during the daily time frame of that, it would have required 20 days of sideways action that never made a lower low. And we can see that that's not what happened, right? So in order for that weekly chart to get the pullback, the daily had to flip into a downtrend, right? Now, let's envision that this was a daily chart right here, right? Let's envision that it's a daily chart. We get a move up, a move up, a move up, a move up, and we start to pull back. Now, this is just 2 candles. So that hasn't shifted into a downtrend by any means, right? This is simply a pullback within an uptrend. But within those 2 daily candles, you're going to see 14 hourly bars, 14 hourly candles. It's unlikely that those 14 candles maintained an uptrend, or 21 candles if you include this bar down here. It's unlikely that those 21 candles held an uptrend that entire time, right? The way that the daily did. So in order for this daily chart to get a pullback, we needed the hourly chart to shift into a downtrend. Now, an hourly chart, in order for that to get a pullback, let's say that this was an hourly chart, right? Let's imagine this was an uptrend, right? Let's imagine that it started, my annotate tool, because this was previously a downtrend for us, but let's imagine it actually started like this, right? Then we would actually be in an uptrend, right? If this is a 5-minute chart, right? Or excuse me, a 15-minute chart or a 5-minute chart, in order for this to get a pullback, in order for, excuse me, the hourly chart to get a pullback here, the 5-minute would have to shift into a downtrend, right? So it's really important to understand that these levels impact each other. They connect, and what they do impacts each other, right? Right? So if you are looking for a daily chart, like this one, for example, if you're looking for this one to get a pullback, if you're like, hey, I really want to long this chart, but I need a pullback first. One of the first things that you could look at in order to identify that that pullback is coming is when the hourly chart shifted into a downtrend, right? Excuse me. Right? Because we're looking for a pullback on that daily chart, and that would require the hourly chart to shift into a downtrend. Right? If the daily is flipping into a downtrend, a pullback on the hourly, right, would require the 5 or 15-minute charts to go in an uptrend. This works both ways, right? So I know that this may be a little bit confusing right now, but I just want to ask to gauge where we're at, right? But I just want to ask to gauge where we're at, right? Does this concept make sense, right? That for this weekly chart, remember weekly, for these 4 weekly candles to get a pullback, this doesn't change trend. This just gets a pullback. In order for that to get its 4-bar pullback, does it make sense that the daily chart would have to shift into a downtrend because it has 20 candles in there? Does that make sense conceptually? Yes. Yeah, makes sense. Yes. I'd love to get a few more in there. Yes. Okay, cool. Okay, right. Again, we're going to show examples of this, but I just want to broad. I want to make sure that we're on the same page right there, right? That, in my opinion, is where top-down analysis is it's bullshit, right? Or it leaves it out, because top-down, they tell you to look at what's happening on the larger, then look at what's happening on the smaller, but they don't teach you how those connect with each other, right? So the last thing I'll note before we dive into the charts, right, is that for us on multi-time frame analysis, our primary focus needs to always be the longer time frames. I don't care if you're mainly a scalp trader or what. The larger time frames are where your focus needs to be on, because that's where the best trades will come from, right? The longer time frame focuses for us are overarching trends and identifying potential larger moves, right? Potentials for a daily or a weekly buy setup or a sell setup to give those larger moves. The smaller time frame for us focuses on entries, exits, and management, right? Now, when in doubt, zoom out. I don't know what these comments are doing there. That's not supposed to be there. But when in doubt, my friends, zoom out and ask yourself, what is happening on the larger time frame? I cannot tell you how many mastermind students, while in the learning phases, right? Like those first few months of learning, right? I can't tell you how many of you in the first few months of learning, right, will focus heavily on the 2 and 5 minute type of setups. But those 2 and 5 minute buy and sell setups, the reason people focus on them is because you get more dopamine rush, right? Like they happen faster, it's quicker, you get more ooh, wah, right? Like it's like, you see more immediate results, right? Whether it's win or failing, right? So now that you know the system, or will have learned the system after we go through the charts, right? I encourage and implore you all to start with 15-minute and hourly charts, looking for buy and sell setups on the 15-minute and hourly, looking to really focus and harness and pay attention to what's happening on those, because oftentimes, much like how when people traditionally teach top-down analysis and then they only focus on the smaller stuff, I'll teach top-down analysis and focus on the longer stuff, but people, myself included, when I was learning, will go right back to the smaller time frames. I need you to understand how important it is to understand how they all connect with each other, and how the smaller time frames are actually more, the larger time frames are actually more important to focus on, right? So for me, just one other note that I have is for ideal buy and sell setup entries, I like 2 and 5 minute buy and sells, which in one of the other mastermind MTFA lessons, we cover a concept of a 2 within a 5 really well. I think it's MTFA class 4 that we do that. The concept of a 2 within a 5 really well. But I like having things in alignment with each other on 2 and 5 minutes. Afternoons, I'm more looking for 15-minute buy and sell setups or hourly buy and sell setups. And for swing trades, I'm paying attention to weekly, daily, and hourly buy and sell setups, right? Those are what's really, really important to me, right? So with that being said, I'm going to stop share here. I'm going to pause for a second. I'm going to sip my water. All righty. Let me now get my other screen loaded. All righty. Okay. Now, let us begin here. And we're going to use Netflix as tonight's example. All right? Let me get this full screened. Like that, a little bit like that. See. Alrighty. Perfect. All right. So let's conduct some multiple time frame analysis on Netflix, right? Now, the first thing that we're going to do, much like traditional top-down, is go and identify our weekly chart, right? The reason I'm using Netflix as an example is because the other day it had a really great daily pullback that required the hourly to shift into a downtrend. And then the break of that trend resulted in this parabolic type of earnings move, right? So you can see here that Netflix has obviously sold off extremely hard from the highs, right? It flipped into a downtrend, arguably either here, or you could even argue that it flipped into a downtrend here once it had broken beneath all this support. My mouse feels like it's like low on battery or something. All right. Right. But Netflix was in a clear downtrend. And then down here, it starts to base out. And eventually going forward, Netflix starts to flip into an uptrend, right? We break through a lower high there. We come back and set a higher low. We break up and get a higher high. Come back and get a higher low. Break up, get a higher high. Higher low. Higher high. Higher low. So there's no doubt here that the weekly chart is in an uptrend up into this point where we see this pullback right around here around the 300 area, right? No doubt Netflix is in a forward-looking uptrend, creating higher highs and higher lows as it continues to move up, right? Then we flip to the daily chart, and I want us to focus a little bit on before Netflix made this move, right? Once it started to pull back right about here. Now, what could you argue happened in this oval? And I'm talking about that one right there. What could you argue happened in that one? FTGBH, baby. FTGH, baby. Failure to go higher. Completely agreed. Now, why would it not be a sell signal? Why would it not be a sell signal? Somebody tell me. Why, or excuse me, a sell setup. Why would it not be a technical sell setup? Boom, baby, because we're in an uptrend. Exactly, right? Remember, sell setups are most applicable when they are with trend, right? At the moment, Netflix was in an uptrend, right? Now, could this failure to go higher, though, be the first clue of a potential flip into a daily downtrend? Yes, exactly, right? It could be a clue of a potential flip into a daily downtrend, but it's just that right now, a clue, possibly, right? From here, with this failure to go higher, we see a little 1, 2, 3 pattern that kind of fails, right? It's 1, 2, 3, 4 bar play that kind of fails, kind of a funky one there, but nonetheless, it ultimately fails. And then the daily chart starts to pull back, right? So we have a weekly chart that's in an uptrend, and then we have the daily chart that starts to pull back. Now, while this daily chart starts to pull back, on the weekly chart, that is seen through this wick right here. So at that point in time, it's also just a pullback on the weekly chart, right? Again, potential failure to go higher would be a little bit concerning if we had really gotten breaks like beneath this low and continued lower. But from there, it's just this down little wick on the weekly chart, right? So now let's flip back to our daily. And again, can somebody tell me, can somebody tell me, let me see, I popped up and I see a question that I want to answer. Are we saying this failed because it didn't move strong enough? Because technically it made a new high in the 3-bar play and it didn't play out. Yes, Mike. And so let me pause this and answer this question before we move on, right? This technically broke higher. The 3-bar play technically played out, but we didn't get a close really above there, right? Is it a higher high? Yes, but let's revert back. And if you review the mRNA example, in the mRNA example, there was a couple examples of failed higher highs, right? You can see this would be an example of a failed higher high, right? If something just breaks over and fails to get over after all that, higher low consolidation to break up, right? Took out the highs, but based on our rules, once it takes out those highs, it should continue higher, right? So that's why we're saying, Mike, that's why I think it's important. Again, I'm not trying to single you out. I apologize, man. But that's why I think it's important for us to understand when we said, what could this possibly be giving us a clue to? A failure to go higher, right? Possibly. It's not a definitive failure to go higher yet. And I'm not shorting that, right? I'm not necessarily shorting that, right? But that's a possible failure to go higher, right? From there, though, we start to see I don't assume that this is going to flip into a bearish trend. From here, right, all I wanted to note was that there was the potential failure to go higher. From there, though, this looks to be setting up what? A daily blank. This looks to be setting up what? A daily blank. This is just a daily. Remember, we're in an uptrend. Pullback. Boom, boom, boom. Exactly. Bull flag, similar term. Bull flag, all good. I wouldn't call it an inside bar because we had a couple breaking, beneath the lows here. But we were setting up the buy setup, right? We were setting up the buy setup. We were setting up a buy setup, and we were setting up a daily pullback, right? A daily pullback. Now, in order for the daily chart to get that pullback, what needs to happen to the hourly chart? Trend shift to downtrend. Exactly, my friends. Like we mentioned, right? That's the piece of top down that people I don't mention, right? Because people will be like, oh, the daily's in an uptrend, but the hourly is in a downtrend. I don't want to touch it. It's like, well, no, this hourly had to get into a downtrend. It had to, in order for this daily to pull back. Let's take a look at what that hourly chart looks like. Extended hours, gross. There we go, right? Here's the oval where we fail to go higher, or potentially fail to go higher. Good note. Potentially fail to go higher. We do create that new high, but then we start to reverse, right? And what happens to Netflix right over here? Here we have some higher lows that we fail to hold. We get breaks beneath and we set a new lower low, starting to shift the trend. Here we end up setting what ultimately doesn't act as a very clean one, but another lower high before continuing to sell off. Then Netflix gaps down, does rally back a little bit, ultimately setting like another lower high and getting, oops. And on each of these times, they got new lows, right? Let's mark these as 1, right? So in order for Netflix's daily chart to get this pullback, the hourly had to shift into a downtrend, right? Now, Netflix is an example of an earnings type of gap that changed the trend, right? But this is another example of why Netflix was an A+ setup last Friday, right? Maybe not A++ because of how overall market, no, I mean, it's pretty damn close, right? Again, I was planning to take Friday off last week, and I literally came back and I was like, well, we got to trade this Netflix post earnings, right? If it opens where it is. Why? Because of a variety of different things. On Monday, and let me clear some of these drawings, some of these ones. Right? As of right here,
I'm going. Oh, let me lock the door. Yeah.
As of right here, we had the weekly chart acting as a resting bar, right? It was just kind of pulling back. It hadn't really done anything. If we look over here again, during this point in time, we were just at this wick on Netflix, right? Just this wick down here, right? So the weekly was kind of resting or potentially forming an inside bar, not doing anything crazy. But in order for it to get that rest or that wick, we had to see the daily chart pull back into a pullback, right? The daily chart had to get a pullback in order for that weekly to rest. In order for that daily to get a pullback, the hourly had to shift into a downtrend, right? So at this point in time, right here, weekly is resting, daily's pulling back, hourly is in downtrend. Now, what makes Netflix such a great setup on that particular day, right? And again, we were able to catch this one from like 280s to 5s or something, which is a great trade, right? Is that with this gap up, not only did we happen to gap right over a level, which was important, right? We happen to gap right over a level, but what does this gap do? There are like 3 different answers I'm going to look for. Mainly, actually 2. There's 2 different answers I'm going to look for. This gap up here, what does this do? Boom, boom, boom. Aha, there's that. Yeah, I love it. All right. So people have noted change the trend, right? And I'm assuming you are referencing the hourly chart because the hourly is the one that had to pull back into a downtrend, right? Right? We're all clear about that? In here, hourly flipping back to uptrend. Now, there was another note that somebody noted. There was another note that somebody noted in here, another answer that I really like came from Nick T. Shout out to Nick T. The hourly was flipping back to a day trend, a uptrend. The daily chart at this point in time was triggering what? In an uptrend, pull back, break above previous bars high. What did we trigger on the daily chart? Technically, just by gapping above right here. What did we trigger on the daily chart? Give me a few more answers. Yep. Buy setup. So the answer is buy setup. When we broke and gapped back over this, remember, right? In a bicep definition, in an uptrend, Netflix is in an uptrend. Look for a pullback to establish support and a bar to break over previous bars high, right? So when that daily chart, so we had the hourly flipping into an uptrend, the daily chart equals triggering a daily buy setup, right? In the weekly chart, was getting continuation. So what made Netflix such a good setup on that day? The time frame confluence. I want you all to think about this and start to get this term into your head. Time frame confluence. Apologize for the spelling there, but you all get the picture, right? Time frame confluence. What does that mean? Our time frames were in sync with each other, right? We then drill down into a smaller time frame, like a 5-minute time frame, right? Or let's even go to a 2-minute time frame, right? Right here, it's not traditional, but the 2-minute just also flips into an uptrend, gets a pullback, and triggers a buy setup, right? Again, it's not traditional, like I mentioned earlier on. Everything I say has exact reasoning. This is not a picture perfect buy setup. Like I said earlier, I said it very specifically because I knew we were going to go to this example. There are going to be times where a buy setup is a big red bar followed by a big green bar. You are not always going to be most comfortable taking those buy setups. However, right? However, that is by definition a buy setup after holding the level, which presented a long entry, right? So here, continuing on, weekly charts continuation now. 2-minute buy setup for entry. 5-minute aligned. In my opinion, on that day, the Netflix 5-minute was also aligned. It had a big gap up. It spent one candle digesting and taking out the pre-market lows, sweeping the overnight lows, and then getting a rally back above the open. The 5-minute was aligned with this structure, in my opinion, right? Now, let's say you missed this particular first entry on Netflix, right? You miss all this moving. It starts to become real choppy a little bit later on in the day, so you decide not to participate in any more Netflix entries, right? Now, as I mentioned, post 8:30, I'm looking more at the 15-minute charts, right? Again, in here, we've been very clear, buy and sell setups are best when we have clean trends. Would we call this action a clean trend in one direction or the other? No. I know we wouldn't, right? This 5-minute chart would not be called action, clean action on a 5-minute chart. If we switch to a 15-minute chart here, though, you can see on this day, it starts to paint a little bit of a clearer picture, right? Where the trend has actually held. We have a low here, a move up, a pullback. Now, is this a clean trend? No, this is still plenty of chop, right? This is still plenty of chop, right? But the 15-minute right here provides a little bit of a breakout entry in the market. Now, Jake, this 15-minute green bar here doesn't look all that different from the one right here or the one right there, which again, even if you took this one or this one, you wouldn't have been stopped out on either of those trades, right? All of them would have been working. You just would have had to hold through some consolidation and some sideways action, right? But what about the hourly chart? The hourly chart at this point in time moved up, pulled back, and triggers the hourly buy setup right there. All morning long, no hourly buy setup triggers until the afternoon here. And once that hourly buy setup triggers, right? Once that hourly buy setup triggers, you can also see that happens to be the point in time, if I mark it right here, that also happens to be the point in time where we get this 15-minute little larger breakout, right? Right? So everything is aligning for this. So Netflix to be an A+ trade, we had all of these things lined up. And right now, I'm just going to reference the first trade of the day, not a later afternoon trade, right? But on this first trade of the day, we had hourly chart flipping back into uptrend, daily chart triggering a daily buy setup, weekly chart getting continuation, 2-minute buy setup for entry with a 5-minute chart that aligned, right? Why do I say this 5-minute chart aligned? It failed under pre-market lows, then was setting up to get back over the open. After a gap up, a digestion like that, little early morning selling, people who swung taking their profits, right? And then ultimately a sweep, but failure underneath the overnight lows, that 5-minute chart is aligned, right? So with all these charts lining up with each other, we have what ultimately, in my opinion, is the final piece to our strategic puzzle, which is time frame confluence. Time frame confluence, meaning that these time frames are working with each other. They are working with each other. These are the A++ setups when time frames are aligned and they work with each other rather than against each other, right? Right? So I'm hopeful that everybody has a clear understanding of what exactly I mean, right? Does everybody understand at least these 5, right? These 5 things, why the hourly chart was flipping an uptrend, why the daily chart was flipping, triggering a buy setup, why the weekly chart was getting continuation, why the 2-minute triggered a buy, why the 5-minute was lined. Do we all understand all those, right? They understand at least the why those click, right? Awesome. I saw one question that would be, what would a fail setup be here? I don't know if I fully understand that, but if you're on this first entry, if you're looking for where the stop is, it would have been back beneath low of day, right? Because technically this red bar would have been our signal bar, right? A failure setup, a failure of this level would have looked like a gap. If you're asking, again, that's why failure is a broad term, because if you're asking the question, what would a failure of this gapped up look like? That would have more looked like this bar rather than us holding the level, us failing the level, testing it from underneath and then going back under, right? And failing to under. That would have been a failure setup meaning like a failure of the gap up, us looking to short that gap up as a result of that, right? But that, my friends, is time frame confluence in a nutshell. So let me pause here. I'm going to detach window. I'm going to reshare my Google Slides. Because with that, and again, we will solidify this with you over the course of the next few lessons, particularly lesson 8 and some trade reviews. However, with that, my friends, you know it all. You know our technical offense or technical analysis triangle offensive system. Do I expect you to have it all memorized or know it all by now? No. Is there nitty-gritty details that you will absolutely learn every day over the course of the next 5 years? Yes, absolutely. Right? Oop. Getting a bunch of tags, team chat tag. Mute, please. Thank you. Thank you, Allie, for doing that. Boom, bing, bang, boom. Nailed it, nailed it, nailed it, nailed it. Okay, perfect, right? Now, you all know it, right? Like, you know it all. You know all the nitty gritty, or actually not all the nitty gritty, but you know all the concepts. You know everything, right? So now it's time to give ourselves rules and checklists prior to entering a trade. We have 4. And what I'm going to do is copy and paste these. And then we're going to stop share. And I'm going to reshare my Thinkorswim. Right? So now let's paste this here. Let me do. Here are the 4 things that we look for before we enter a trade. God, my mouse is really going slow. I wonder if it's just Zoom. I've been on, this is my computer's freaking out because of the meeting, right? First rule that we have on our trades is that for our trades, like we mentioned, we see buy and sell setups all day long, right? We see buy and sells and failures all day long, right? So we can't just take every one of those we see. We've also noted that using a level, buying calls over 177 is not a long-term sustainable strategy, right? So we need to have 4 rules that we can have within ourselves to sort of guide us as to what trades are permitted to take, right? First one is in all or 99% of our trades, I would like you to be using the level or the open as a reference point. You need to have some sort of level there guiding you, telling you that there's going to be a reaction that we can take a trade off of. In this particular example, I had the 335.12 level as well as the opening print for the day right there at 336.83, and we'll make that green. Right? So first, check mark. Using a level of the opening print as a reference point, check. Done. Majority of our trades too are with trend, right? They are with trend. If they're counter trend, it's for very specific reasons or like a range day, right? So this one, we have an example. Is Netflix with trend? Absolutely. The hourly chart had just flipped back to an uptrend. This 5-minute chart was in an uptrend. Our trade was with trend, right? Third rule, when trading trend flips, right? Wait for the setup to trigger, right? Or actually, let me rephrase that. When trading trend pullbacks, not flips. Whether it's a pullback up or down, depending on the trend, right? Wait for a setup to trigger, right? So in this example, waiting for that 2-minute to trigger back over the open, right? Or this bar back over the open, or back over this bar's high, right? Right? Wait for the setup to trigger to enter you into the trade. Again, this is one of the notes that I'll have. Sometimes people might notice that on my signals, I do not always wait for the trigger before entering. Sometimes I enter a little bit early. That is because, one, with screen time, I've been able to recognize when I see or buy a sell setup or forming. 2, I'm also signaling. Any trade that I take that I don't signal, that I'm on my own, I wait for the setup to trigger and then I enter it, right? I wait for that break above bars high or break above bars low. But above all else, my friends, above all else, we want time frame confluence. Above all else, we want our time frames to be synced up with each other, to be aligning with what we want to happen in the market. And you can see on this particular Netflix trade, Everything was in sync with what we were wanting. What made this Netflix trade even better was that SPY also happened to be triggering a daily buy setup as that was occurring, right? So that another reason that makes that A plus is we had SPY on our side, right? So the last thing that I want to cover tonight, and I know it has been a very thick lesson, so stick with me here, but the last thing that I want to cover tonight is the QQQ trade that we took today, and then reference it into failure patterns and all of our rules, right? So let's first mark our rules here. So first, the place where we took QQQ calls today was we took them right here on this 2-minute trigger right here, right? So via our 4 rules, let's go through and cover them. First, using a level or the open as a reference point. I was using the opening print and the low of the day as a reference point for this trade, right? I was thinking that if we were in a range, like we talked about earlier today, the best way to trade a range is to buy the lows and sell the highs, right? Something is stuck in a range, right? So second rule here, with trend, the majority of our trades are with trend. Was this trade with trend? Depends on how you look at it. And that's why I say that the majority of our trades are with trend, right? Because the majority of our trades are with trend, but this would be an example of one that wasn't with trend. For what reason would I take a non-trend trade? One, if we're in a range and I don't think that that chart has a trend, but I want to trade it, I would look to trade it more like a range, which again is very simple. Look to sell the highs, buy the lows, right? Right? The majority of trades are with trend, right? So here's an example of a non-with trend trade. And that's why that was majority. When trading trend, and this should say when trading trend pullbacks, wait for setup to trigger. I'm also going to add a note in here. When trading failures, wait for setup to trigger. So in this example, I wasn't buying a with trend pullback, right? I was instead looking for a failure to trigger. And here we got a failure underneath overnight lows, the opening print, and the low of the day, right? And I waited for that trigger. Again, I took this one a little early because I was signaling it, but the proper way I would have done it if I wasn't was be to wait for that trigger, right? Wait for that trigger over the trade, right? In order for me to enter. Above all else, we want time frame confluence, right? Now, on the larger time frames on QQQ, in my opinion, today was suggestive of a range day, right? Again, we have the weekly chart setting up for a potential flip into an uptrend. We have the daily chart, right, that has flipped into an uptrend, right? And now what we are seeing was essentially an inside bar. So the larger time frames were agreeing with me that it's okay to trade longs, right? And the daily chart was giving that clue of a potential inside bar / range day, right? So that allowed me to have time frame confluence on this setup. However, let me ask you, the time frame confluence that we saw on QQQ today, would you all consider that in the same ballpark of the time frame confluence that we saw on Netflix? No, right? Definitely not, right? Like, definitely not. For me personally, the time frame confluence on Netflix was an hourly trend flip, a daily buy setup, and a daily buy setup and a weekly continuation. On this chart, my time frame confluence was a potential range day on the daily chart. So was this trade A++? No, not at all. And that's why this trade didn't have the size for me that I had in Netflix. This is why this trade wasn't something that I was aiming for the moon on or anything like that, right? This was more of a hit and run type of trade. I wasn't trying to be a hero, make a ton of money, because the longer time frames did not have anywhere close to the time frame confluence that we had on the smaller time frames, right? Make sure. Am I sharing screen right now? What screen am I sharing? It's Thinkorswim, right? Okay, cool. I was freaking out because Zoom is not showing me the normal little yellow tabs that it shows. Okay, I was freaking out that I just did that whole spiel on there. Okay, cool. Cool. Okay, all right. So here you can see that this trade did follow all of the rules, right? And I'll add a little note here. I'm going to put exception. Range days, right? Majority of our trades are with trend, and one of those exceptions would be a range day, right? Again, if you're wondering, how did I know it was going to be a range? How was I predicting the range? Make sure you watch the trade review from earlier today. I go super in depth about it just to avoid, repeating myself exactly what I said. But mainly it was because of where we opened up on that daily chart, right? I think that really played a clue into us, right? But you can all see how even on a non-A plus setup trade, and my mouse is really going slow now. Even on a non-A setup plus trade, we have alignment with all of our rules, right? But we can also see why that is not nearly the A plus trade that Netflix was, right? And that's why one was titled Lotto and one was treated more like as a serious trade, right? With that, my friends, a full 2 hours later, we have now completed. Oh my gosh, it's already moving. Calm, breathe. Oh my gosh, I got to start doing it now. Oh my gosh. Yes, we got to hold our reputation because other people try and do this. Everybody, they try and do it. Woo! Lesson 5 is in the books. We tied together so much stuff. Oh my goodness. Literally, this is fucking nuts. Find me this energy. Find me. You can't. You literally, you can't. I love you all so much. That is all I have for you tonight. With that particular lesson, we have covered the bulk of our strategy, right? So as soon as I hang up the phone right now, I'm going to post a bunch of other bonus lessons for you all. So let's get to that. I love you all. Any questions, do not hesitate to reach out. We will absolutely take care of you. Big shout out to Ron, Ali, and I think I even saw Mike on tonight. Big shout out to everybody on. Super helpful. And I love you all very, very much. All right. I'll get this recording posted in a couple of hours. Cheers, gang. Woo! Oh my gosh. If it's still going, if it's still going, it's still going. This is like the slow energy. This is like when it's calm. This is literally the calm before the storm. That's how nuts this is. This is calm. I love you. Cheers, gang.